China's economic growth?
China be able to sustain a war?
The dragon is in troubled waters. I'm talking about China. The Chinese economy is riddled with multiple economic crises. A massive banking fraud sparked a rare show of dissent on the streets.
From a revolutionary feat of engineering to a $1 trillion debt trap, the high-speed railway system in China was once seen as the answer to the global financial crisis. But now, confidence in the financial sector has plummeted, and the central government is scrambling to contain the situation. So what does the future hold for China and its high-speed railway debt? Well, step into a world of financial uncertainty, where one misstep can lead to bankruptcy. But fear not, as our channel, Bankruptcy, is here to guide you through the tough times and secure your financial future. Subscribe now, and let's get started. The Chinese high-speed railway system was once hailed as a revolutionary. The Chinese high-speed railway system was once hailed as revolutionary and even miraculous. It was a feat of engineering that connected political capital to a financial hub, and it was seen as the answer to the global financial crisis of 2008. But now, confidence in the financial sector has plunged, and this once revolutionary railway system has become a $1 trillion debt trap that has China's central government scrambling to contain the situation. China's high-speed railway network grew from a mere 1,000 kilometers in 2009 to a record 38,000 kilometers in 2020, making it the largest in the world. Initially, this railway system was seen as a solution to the financial crisis as it created jobs and injected money into the economy. However, over the years, the investment in this system has become more about grandiose projects and a display of power than about actual efficiency and reliability. The high-speed railway operators have seen their debt balloon over the years, and many of the lines are running at idle capacity with less than 40% utilization. With the absence of freight tariffs, these lines are dependent on passenger fares to cover their costs, and with expensive ticket prices, many cannot afford to ride the trains. This has resulted in fewer people using them and has caused the debt burden to increase even further. The Chinese railway company's financial woes have been further exacerbated by the pandemic-induced restrictions on travel, resulting in a 54.8% year-on-year crash in passenger earnings in the first quarter of 2020. This has caused the company to be unable to pay the high assured returns on its bonds, leading to its interest rate crashing from a high of 5.78 in 2014 to an all-time low of 3.97 in 2020. The high-speed railway has also been plagued by allegations of corruption, with former Minister of Railways Liu Jixun dismissed in spring of 2011 amid an investigation into unspecified corruption allegations. It has been alleged that he took a 2.5% cut on high-speed projects and that other officials have taken bribes and kickbacks. The Chinese government has taken steps to address the situation, such as curtailing investigations in high-speed railway projects, suspending construction in regions where the debt burden is high, and asking all governments to ensure their railway debts should be within a rational range by 2035. The Chinese economy contracted sharply in the second quarter, and the future of its economy is very uncertain. It remains to be seen if this train debt crisis will be another meaner, worse version of the Evergrande crisis, or if it will be contained. All that is clear is that China will suffer some bruises to its GDP and its ego as a result of its high-speed railway debt. It all started in 2008 when the Chinese government undertook an ambitious high-speed railway project to counteract the effects of the global financial crisis. This project was seen as a way to unify the country, stimulate the economy, and provide much-needed jobs and infrastructure. The first line was completed in 2009, and by 2020, the track length had reached over 38,000 kilometers, making it the highest in the world. However, the craze for high-speed railways has made China neglect the construction of controversial systems, resulting in an unbalanced logistics mix, with rail consistently trailing road and water freight transportation. On top of that, the high-speed railway construction costs nearly 3 times more than a conventional rail line, making ticket prices too expensive for many Chinese citizens. The situation has been made worse by the prevalence of corruption. Allegations have emerged of kickbacks, bribes, illegal contracts, and sexual liaisons among railway officials. This has only served to heighten the public fear surrounding high-speed trains. The increased heat on debt-ridden operators has also dented the bottom lines of the investment banks and shareholders of China's Railway Development Fund. As bond yields nosedived and profits crashed, the Chinese railway company decided to liquidate the RDF 9 years early to avoid paying dividends to investors. In response, the Chinese State Council has curtailed investments in high-speed railway and suspended all construction in regions where the debt burden is high and surpasses its fiscal strength. They have also asked all governments to ensure that their railway debts should be within rational range by 2035. So what does the future hold for China and its high-speed railway debt? It remains to be seen how the Chinese government will respond and what the impact will be on the Chinese economy. One thing is certain. The cost of the $1 trillion debt is not going to disappear anytime soon, and China will have to bear the brunt of the consequences. Thank you for watching this episode of Bankruptcy. With the situation constantly evolving, there's no telling what the future holds for China and its economy. But one thing's for sure, the impact of this $1 trillion debt trap is going to be felt for a long time to come. And that's all for today. If you want to stay ahead of the game and secure your financial future, make sure to subscribe to our channel and turn on notifications. Until next time, take care and stay informed.